Hey, can you hear me? Okay. I didn't realize that. Started it. One second, I'm gonna figure out how to share this thing. There you go. All right, you see my screen? figured out. I'm saying that not do every day. So once I get this locked in, it'll be all good. Access I don't get why it's not. Oh, you can hear me. Okay. All right. So the mic is on. You just can't hear me clear. Gotcha. It's probably because they got music on in the background. So, probably they got music on. I don't know how else I could do this. Give me 1 minute to try something out real quick. So, hello, 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 hello. All right, how about now? Is that any better? It's not good, but it's just noise canceling. Gotcha. Um, all right, is that any different? Probably not. It just canceled the noise on my side. Matter of fact, I think it's using the computer's microphone. All right, let me just try to run through it real quick. Oops. Let me go back in time. Oh yeah, we were supposed to talk about the accumulation and the manipulation and then distribution. And we had a perfect example of that today. So let me get rid of this stuff. I could create that. All right, you see my chart good? Now this area here is the accumulation. I'll go ahead and delete everything. You know what? Let me do it on another chart. Hold on. It's the same area. This human chart. So this whole area here is an accumulation low range. Within this range, you want to identify the highest high and the lowest low. It would be here. Let's start back here. All right. So this right here is the accumulation phase. We got price to stand within this range. It's going sideways basically. So once we see this, we would expect price, if it wants to, like in this example, if we want to be bullish, we would expect it to take out sell side liquidity first and entice people to get into sales, making it think this is the direction the market wants to go. So once it trick enough people in going down, it go ahead and make the real move. So this is the accumulation, and then the liquidity grab up under all these lows is that's the manipulation. You got price run down real quick, and after that, we get the distribution. So price turn around and run to the side it really wanted to run to. It wanted to take out the buy side. It grabbed the sell side, now it's time for the buy side. So the way we could benefit off of this concept right here is when we see that the market is in a range, it's trending sideways, we wait for the manipulation. We don't anticipate it to manipulate one side or the other. We wait to see what side it manipulates first. It's knowing that manipulation is right before the distribution. Once we see that big sudden displacement of a move in one direction, we can wait and anticipate the reversal to catch the real run to the opposite direction. So this right here is a perfect example of that, and this was price action today. We have this nice little consolidation range. Price is not really doing nothing. It's not making no new highs or new lows. It's just sideways. So we're like, okay, that's the time that we want to stay out and just observe what's going on, and just basically wait for it to do what it do to show us what we really want to do. So this right here was that example. Let me show you what it looked like on a smaller time frame. Let's see. Let's go to the 9 o'clock or 9:30. I'm gonna hit that. All right, so 9:30 right there. 10 o'clock. 9:45. Then 11 o'clock. Make the screen bigger. Let's see. Is that better? Sure. All right. Oh, it's 2:22. All right. Hey, if you think you know what? It's volume. Hold on real quick. Put this on pause. There it is. Oh, there we go. Hey, you hear me better? All right. Huh? All right, so, all right. So the way I would have, or the way I did get down on this one, you know how we look for the immediate liquidity to the left of the market, like right before it opened up. So, well, nah. Oh, it's probably because was you looking at it on your phone? On mine, it's showing it's still on. So try to just log back on.
Thank you.
It's all good. All right. So let's see here. So we mark up that recent liquidity, right? The recent high and the recent low, because the market is going to reach for one or the other, depending on what we're doing from the higher time frame. Huh? No, right before the market opened. These lines I got marked going up and down, that's the 9:30 open. So this is the only area that we're interested in for right now. Just for this example, but like we can go into this having information or knowledge from the higher time frame as far as what trend we're in. Are we in a bullish market or bearish market? We're going to apply it to this, but just for this right here, for this example, it's going to show you the manipulation. And we have to look at this whole range as the consolidation from the higher time frame. When we was looking at the 15-minute, see this high, then that low, that's the consolidation from the 15-minute. So we're paying attention to that, being aware of where we're at within that price range, meaning are we in a premium or are we in a discount of this price swing right here? Because when you're in a discount, you're looking for buys. When you're in a premium, you're looking for sales. So realizing where we're at within that, it'll help give us a bias as far as what the market want to do based off of what it does after the market opens. So now the most recent high and low, right before the market open, we want to identify that. Actually, the most recent would be down here. All right, so we got most recent, or the highest swing high, and then the lowest low, like right before the market open. The market open and take out sell side first. So when we see it take that out first, that's usually the manipulation move. But this right here is a little accumulated phase right here. And it runs down, take out sell side, and then it runs up, but it don't take out the buy side up here. So it still got more business to do on the downside, right? But we're looking at this information within this first 15 minutes, literally just for information. That's it. We're not looking at that to take a trade on it. So here's in there. So, like I said, we're just using all this information because we know that the first 15 minutes is going to be the manipulation move. So it's going to do something that will make you feel like you know what it's about to do. And that's the whole point of that first 15 minutes is trick people in and out. So once we see that, now we have the 9:45 window of opportunity pop up. So at that point, we start looking for the first opportunity for a trade, whether it's a fair value gap that's bullish or bearish. It don't matter. The way I look at it, or the way I like hop in on that, is from the higher time frame, depending on what's being respected. If we're bullish and in this area I see something set up for bearish, I'm not looking for nothing bearish. I'm not touching nothing bearish. I'm only looking for buys. Even if the bearish setup look clean, but on a higher time frame, it's showing nothing but bullishness. You know what I mean? So we're gonna get on that part a little later. I just want to show you the example of this trade real quick. So, do you see after this 15-minute window, after 9:45 and 10 o'clock, do you see a setup in here? Bullish or bearish? $7:45 a.m. Let's see. That's good. Still don't see it? That's good. Yeah, this thing is yeah, I'm on it there. You still don't see me? I mean, you still only see me? So I gotta figure out a better way to do this streaming thing. All right, let me see if I can stop sharing and then share again. Right now. All right. So I'm gonna show you. Let me show you the little setup I see up in here. But you're aware of the inverse fair value gaps, right? Like how we utilize those. All right, because that's what I'm using as information in here. You say what? You said 9:51. Yeah, that one do get inverse, but around that time we want to look at the first 15 minutes and use that as something to get in on. Although we're not looking for a trade between 9:30 and 9:45, we can still use that price action to execute on a trade. You know what I mean? So let me show you, for example, what I'm talking about real quick. Of how the inverse fair value gap played a major part, and it was also the first presented fair value gap. So that gives it relevance also. So the fact that the first presented fair value gap got inversed, that's a strong indication that that's the direction that the market want to go. Or at least you can catch a move off of that that will grant you, you know, what you need for the day. So let me see what this is. All right, so that's the first one. So this right here is deemed an inverse fair value gap once this candle right here at 9:40 closed under it, right? So once we see that, the candlestick that actually makes that happen, that solidifies that, leaves a fair value gap also. So we want to pay attention and notate that one too, to see how price react and respond to it. So let's go to mark that up. All right, and now, how would you get in that? Because it looks like it's a 3-1 to me, and I haven't even marked it up yet. But I could be wrong though. But where'd you enter? At the bottom. All right, cool. I'm about to mark it up real quick. Yeah, it's a 3-1 for sure. So that trade took, got in on 946, got out 948. That's a 2-minute trade. Let's see what it's doing. Entered here for 50% of that gap. Got it down there, 439. Let's see. I just need to move slow. Use my phone. I gotta do a whole lot right now. 439 times 5 contracts, 250. So that would be a $1,000 trade. Why is the screen tripping? Let's see what the other setup could have been. So that's at 9:45. So let's look at 10 o'clock. 10 o'clock would have been another. Hello? No, that's all good. You see the setup at 9:45? That was it. Oh, okay. Yep. See, can you still see my screen? All right, so you see right here at 9:45 how price came up to the 50% of that fair value gap, which is also overlapped with that inverse fair value gap. So entering there, putting the stop loss above the candlestick that left the fair value gap, that's where stop loss goes, right above that. And then 3 times that was a 3-to-1. It actually went all the way down to almost a 4-to-1. Maybe you entered on the bottom of the fair value gap, because that would have brought your risk up. So putting that there, then the 9:45 right after 9:45. So if you would have entered at the bottom of the fair value gap, then that's not a 3-to-1. But look, the 3-to-1 would have been way down here. So maybe that's where you entered at the bottom instead of the 50%. $10.06. Okay. You got it in there, then got out where? Yeah, that actually went lower. Micro managed it. Yeah. Yep. It was twice. That thing hit twice. Yeah, you gotta trust the process. Doing that, moving the stop loss is changing the variable in the equation. And to get, consistent stats, all the variables got to stay the same. It has to be systematic. It has to be like robotic. Like everything, all the rules of the strategy, nothing to deviate from that at all. All that remain static. So that way, we just let the process do what it do, and we build that confidence through back testing, seeing how often it works versus how often it don't work. And once we have those numbers, we just gotta learn to get in, set those limits, and let those limits be what they are. You know what I mean? 956. 954. It did tap it up. That's another trade too. It's okay. The thing is, it tapped into the order block. That could have been the entry, and the stop loss is above the highest point of that order block. Yeah, that would have been solid. Man, and this I promise you, do the back testing. Show yourself how often this works without getting in it live, trying to see it work. Because when you're in it live, your emotions are involved, and it's hard to view through a lens of logic. You know what I'm saying? Because emotions are instilling your actions and reactions and dictating your decisions. You know what I mean? So if you back test with just having the benefit of hindsight, just to see how often it works versus how often it don't, that will help to have you have the confidence to let it play out. Because off of X amount of trades, you know what I'm saying, that you do 20 trades, you see it smacked 17 times, you take 3 losses live, you're like, man, I know I got 17 good ones coming. You know what I mean? It's a game of probability at that point. So this are you gonna send me a screenshot? Okay. 1021. That's it. Yeah. Okay. Yeah. Yep. That right there was the manipulation when it ran down there. But the thing is, that's all after the window of opportunity. You know what I mean? Well, this is just when I prefer to trade, because 1020 is not too late, but you said, okay, so you're talking about it going under the low at 948 then. Is that what you're talking about? That low that it made at 1020 went below the low at 948. The low level at 1020 or the low level at 948? Yeah. But what gave that more relevance is the low at 1020, because it took out all that liquidity to the left. It even took out the relative equal lows back from, what was that, from Tuesday. Tuesday at 2:55 p.m. So that's the New York PM session. And then 7:09 p.m. So that's the Asia session. So it took out both of those session lows, and it only left a wick up under there. So that right there was a clear indication. And then we've been taking our sell side the whole time the market been open, leaving buy side intact. So it's a whole lot resting up there that the market want to go and tag. You know what I mean? And then all we got to do at that point is sit and wait for a break of structure. And we see that at 1018. Nope, that's not even swing high. Hold on. The swing high is at 1015. So that would be the high that we're looking at for the break of structure. Yep, 1015. You see my screen? it got a lower high to the left and a lower high to the right. So that right there be the most recent swing high. Once we get closure above that, let me show you. 1027. That, yep. Because that candle closed above the recent swing high. So that's the break of structure. And look how much displacement it got. And this one candle, look how much price movement. You know what I mean? So that's displacement. We left the fair value gap. Go ahead and mark it up. I just like to mark it just to have a visualization of it. You know what I mean? To make it make no sense. I like to have it right on the top. Then let's simulate the trade. So long, we would have got in at 50%. Stop loss under the candlestick that left the gap. Stop loss right there, 3 to 1. I can't see the numbers in there. Now with a smack. With no effort, no drawdown. Only drawdown was this amount right here, this little wick. Would have came down, did that, and nothing but profit from there on out. But this move right here is what probably would have got the stop out if the stop loss was micromanaged and moved up. You know what I mean? The stop loss probably would have got put up under this low. Price would have ran up and right back down, slapped this no sense, and then took off and went right to the target. So seeing how price move like this, you know what I'm saying, that right there will help you give confidence to leave this thing down here. Or if not, you know what I'm saying, move it to break even, if anything. To move it to up under the low of the next order block. Because after price did what it did here and took off, it never came back up under that order block. So that would be the next protected low. You know what I'm saying? And look how close the low for that we normally put the stop loss, look how close that is to the low of the most recent order block. So this is for sure a protected area. Price come up under there, this whole trade is invalid. You know what I'm saying? We just had it wrong. That's it. And move on to the next. And this is inside of the window of opportunity. So let's say we hopped in this trade and got, you know what I'm saying, got beat up. Ooh, just chill, wait for another setup, you know what I'm saying, to show itself. And do what it do for that. And we got this setup down here. It's not a technically break of structure, but we got some displacement, you know what I'm saying? But this would have been a mistrade because price didn't come all the way down to the 50% area. But we can use this information to help form a bias, like, okay, it looked like the market then did some damage down here, turning around and looking to do some damage to the upside, buy side liquidity now. So once you see that, you wait for that official break of structure, fair value gap, 50% of that fair value gap, you know what I mean? We hop in that thing. And then trust the process. Place the stop loss, place the 3 to 1 take profit, and man, close the computer. You know what I'm saying? Close the computer, walk away from it. Let the members do what they're gonna do. Yes, but I closed early. When price ran up and came back down, I took what it gave me, you know what I'm saying? And it was cool. It was like $240. So I'm like, I'm cool. But if I would have left it, that would have been a good G-ball. So I took the W because it's a W, you know what I'm saying? $5 to the good is a win. So I was, you know what I'm saying, content with that. So that's something that, you know what I'm saying, I'm overcoming myself. But you know what I'm saying, I'm bringing awareness to it and seeing, like I said, how often I do make that mistake, you know what I'm saying? And in that moment, it's going to help me to basically realize that that's something I need to chill on and just trust the process and let it do what it do. And that's why I can get in here back testing as much as I have, so that way I can, you know what I'm saying, show myself what's going on. Basically everything that I'm telling you is the same shit that I'm practicing myself. You know what I mean? And it's helping in a major way. I did get out when I got out, but before I would have got out a lot sooner. So I'm making progress. I ain't where I'm supposed to be yet, but for sure making progress. But look what price did inside of that window of opportunity up until 11 o'clock. It went right to that buy side, took that out. So if we have a higher time frame or like a longer um, like expected price run or target, and our target with our 3-to-1 ratio is inside of that, that right there can give you even more confidence that price is going to, smack that. But if we see prices headed for this high and our target end up being something like this, you know what I mean? It might not be an easy one to hold on to. You know what I'm saying? Knowing how price usually act around highs and lows. To go up there, grab the pulley, and either it can just retrace 50% back down into that run, or it can completely retrace and go back down and look for sell side liquidity. One or the other. Also depending if it's internal liquidity or external liquidity. External liquidity is like higher time frame liquidity, and internal is any high and low that's within that range. So let me go to the 15-minute and show you what that looks like. I was just talking about this the other day. Exactly. So you see this high here and this low. Well, we have to use this one because it's a little bit lower. All right. So we're using this within this range. We're gonna act like this whole big move outside of here didn't happen. So this right here would be external liquidity. These highs and lows. So this high right here, with it being under this high, this is internal liquidity. This low is internal. This is internal. All this is internal liquidity, highs and lows. So sometimes price can hit one of those and continue down, blowing past the next one, disrespecting the little one on the inside. But it ain't really that relevant. You know what I'm saying? The external one is the one that you really look for, but you can expect price to do one or the other and wants to grab that high or low. So it's not good to have like a target way above one of these highs or lows, knowing that that's usually what price is seeking out. So that's the way to identify that. So that's a 15-minute. You can go all the way to the 4-hour and look at the same thing. And this is how you identify whether you're in a sideways market or a trending market. Is by identifying those swing highs and lows. And then based off of where you're at within that range will help give you a bias as far as what you're looking for, buyers or sales. So pull out the fib, anchor it at the highest high and the lowest low, and that'll give you the 50%, which is the consequent encroachment. So you get that, get rid of the fib, just so you got some clarity on what you're looking at. And you got too much shit all on the chart. All right, so now we got 50%. So we know that the upper 50% of that range is premium, right? The bottom is a discount. So understanding that the price is seeking, the market is seeking like liquidity. If it's in the premium, it's looking for discount liquidity. If it's in the discount, looking for premium liquidity. So when we're down here, we're looking for nothing but buys until we get into a premium. Once we get in a premium, we're looking for nothing for sales until one of these external highs or lows is broken. And that's how we can sit there and tap dance inside of the range. But this is on the higher time frame, you know what I mean? So we come to the higher time frame, it's the 4-hour. So we come here and look at the 4-hour and come down in this area here. And if we see this, we see we're at the bottom of this range and we see a swing low place, oh bet, I'm about to start looking for a break of structure and somewhere, you know what I'm saying, enter on that. And as long as that takes place up under the 50%, you can be confident that you're on the right side of that market. And look, we got that right here. This is a swing high. after this, or right before the swing low, price break up, close above it with this. This candle closed above that high. Even though this candle wicked above it, let me stretch this open this bit. I don't know why we zoomed in so much. But you see how we wicked above it here, but we closed under it. So that one don't really count. But that could have just been a liquidity grab and price tapping into this fair value gap. So chill on that. We ignore this fair value gap down here. Now this candlestick open and close above it, that's the break. That's you know what I'm saying, solid. And then, you said nothing move? Oh, you see this at 2 p.m.? This candlestick is the one that broke the structure because it closed above this swing high over here. So once we see that candlestick close, now we're like, okay, bet. We want to see that candlestick leave a fair value gap. And that'll be the one that we can trust to get into instead of the fair value gap up under it, because that candlestick didn't close above that other high. So then we ignore that fair value gap and mark up this one. And this is on a higher time frame. It's on a 4 hour. So like if we got this bias on the 4 hour and we drop down to the lower time frame and we see the higher time frame price being respected, then there go our bias right there for all of our trades on the intraday price action. So we go along, same thing, 50%. Stop loss under the candlestick that left the fair value gap. Read it one. And with this being on the 4 hour time frame, how much do you think this trade would have been trading pop contracts? Yeah, it's somewhere around there. Let's see. Oh no, more than that. You see how many ticks that is, right? Nah, 37, 20, 23. So hold on. 37, 23. Wait. Huh? Oh, I thought you were talking to me. All right. No, you good. So that trade would have been 9,300. And then even with the order block trade, I see it set up here. So we got the order block down. The order block right here at 2 p.m. You see it? It's over right now. It must be a little delay. All right, so with that order block, we got the two candles to the right of it, both of them closed bullish, right? So the third candlestick, you can enter anywhere under the second candlestick's closing price. So anywhere under that could be an entry, and the stop loss will be under the order block's low. So you put that there. And for the order block, you could target the most recent high. Because we know that order block placed a swing low. So once the swing low is in, now it's seeking the most recent swing high. Especially after there's a low in front of it that it wasn't able to close under. So that's showing right there that that's sign of the market structure shift. And we're at the bottom end of that whole run, the price run. We're in a discount, a deep discount. So with the order block analysis, looking at that from a higher time frame, and then dropping down to a smaller time frame and catching another, concept inside of that, that's a confluence right there. know what I'm saying? That's more of a bias, more of a reason to be confident about the direction of the market. So yeah, this stuff is true. It's true. On the 4 hour, 10 a.m. Yeah, anywhere under the second candlestick's closing price, anywhere under that. So yeah, as long as the second one closed bullish, anything under that closing price is an entry. Yes, it's better. It's better if the order block is engulfed. That's even stronger. You know, what I mean, it played out right here, but this would have been kind of, you know, what I'm saying, iffy because the second candlestick closed under the high of the opening order block. You know what I mean? Where the order block open, you know what I'm saying? I mean, yeah, we're open. The second candlestick closed under that, so that's not really a strong displacement to the other side. But the third candlestick open, I mean, closed above it. So we could have waited for that one to close, and then when price came back down into that second one, then that's the entry. A stop loss under the order block's low. That that looks good, but I need the information from the second candlestick. I would need the second follow candlestick to close to have confirmation. So I would wait because look at where that candlestick closed at, and look where the wick went into. That went into a fair value gap, and there's a break of structure to the left of that that got closed up under. So yeah, I mean the low at 2 p.m. on Wednesday the 17th, that low got violated by the candlestick at 2 a.m. on the 23rd. See that? And also we're in a premium. We're above the 50% right now. So what has been in the premium, what do we look for when price is in a premium? Oh, you look for sales. When it's in a premium, that means that the market is expensive. I mean, price is high. You know what I'm saying? Like people been buying it up, so it's overvalued at that point. So once you're in a premium, now the people that done been in the market from a discount, now they about to start selling off and taking their profits. You know what I mean? So they done already made some money. So boom, they're about to start dumping, and that's gonna bring the price back down to a discount. Now, you know what I'm saying? These guys that done sold and made a profit. Now they're about to buy back the same thing that they just had for a discount. And let it run up again. You know what I mean? That's how they make money. Back and forth. So seeing that price is going, that we're in a premium, we're in a bearish fair value gap that broke structure. For me, it's looking bearish. You know what I'm saying? It's looking bearish, but like I said, I would need to see what that second candlestick do, and also keep an eye on these relative equal highs, because when it's yes, those two highs, that's like a magnet for the price. But if you look to the left, they're both respecting this order block at 10 a.m. on Wednesday the 3rd. Nothing has closed above that order block's high yet. Everything went up there and reversed. It tapped that 3 times. One time on the 4th, then on the 16th, and on the 22nd. So it'll be interesting to see what happened. But yeah, I would need that second candlestick to close, and also see how this price react and respond to this fair value gap on the 22nd, and also this order block on the 22nd at 2 p.m. That right there be the telltale sign. So with price being where it's at right now, so close to equilibrium, I'm not too interested in trying to predict where it's gonna go. Got too many different options right now. And with the bin right there in the middle, it could do either or. Exactly. It's in the equilibrium of that price run. So when it's there, you want to remain neutral and not really try to force anything bullish or bearish because it could do either or from right here. So who are we to know what it's gonna do? The 10 p.m. February you got? 10 p.m. on what day? The 22nd? Yeah, that's the one I pointed out that I said is showing some bearish sentiment. With price being in a premium, it could possibly tap into that and turn around and go back down. That's why I was speaking on that because of that potential order block at 10 a.m. on the 24th. If you was asking me about, you know what I'm saying, how that looked with that candlestick engulfing it, and I was saying I would need for one to see what that second candlestick, how that one prints. Do that one do, you know what I'm saying, close bullish or bearish, or do that candlestick open and tap into that fair value gap at the one at 10 p.m. and then just turn around and dump. You know what I mean? Because we're also inside of a weekly, a new week opening gap. In fact, I'm going to mark that up real quick because price is in that right now, closed inside of it. So that would be the closing price on Friday is down there, and then the opening price for Sunday. Yep, right there. So that is the new week opening gap. Mark that up. All right. Look, we closed just above the 50% of that, but we didn't close outside of it since we've been under it. So this run down up under it can be just, you know what I mean, price disrespecting this area, blowing through it, and coming back up to retest it. And it's tapping into a fair value gap up under a breaker structure. You know what I'm saying? So I'm seeing more things that's pointing to bearishness, and we're in a premium price range right now. So I'm seeing more things pointing to the downside than the upside, but I still would like to wait and see something more solid before just jumping in. You know what I mean? So, but seeing this on a higher time frame, jump down on the lower time frame to see if you see anything that corroborates with this. If you see signs of it, you know what I'm saying, wanting to respect the higher time frame. Because we also got relative equal lows down here. We got those and way more liquidity up under here than we do on the top side. Looking at the whole run that we've done. And then if we use that same principle of consequent encroachment of the run, we're nowhere near the 50% of this whole bullish run. So on a higher time frame, we are in a premium also. Because this right here is the 50% of this whole run. From this lowest low to this highest high, it's still up in a premium. And showing signs on the smaller time frame of it wanting to break down. We got to break a structure right here. So, yeah. It's looking good to me. But again, it can do either or. So better to just wait and see what that first 4-hour candlestick do. How does that print? And that's just gonna tell a story. And that third candlestick, we can, if it print bullish, we can expect the third candlestick to not close or not to come down under the low of that order block. So we can get in anywhere under the second candlestick's closing price on the 4-hour chart. As long as we see something within our window of opportunity that is an entry model, that, you know what I mean, that's aligned with the strategy that we use. And it's pointed in the direction that the higher time frame is pointed. You know what I mean? That gives you the highest probable trades. You know what I'm saying? putting all the fluences together, and that little saying that they say, the trend is your friend type shit. That's, you know what I mean, getting familiar with the trend. It's like, okay, which way are you going? You know what I mean? Are you going that way? All right, good, I'm gonna roll with you. You know what I mean? So that's becoming friends with the trend right there. Instead of trying to fight the motherfuckers or market on the fuck about nothing you got going on. They're just gonna do what they wanna do. So we just gotta figure out what they wanna do and then shit, jump on that train. So that was all I really wanted to put out there. You know what I'm saying? To give you something that, you know what I mean, some structure that you can look at and go back in price action as far as you can go back, you know what I'm saying, and just see how often this shit happen. And even if you gotta like write the trades down, you know what I'm saying? Or once you mark it up, take a screenshot of it and save it. Save it in your computer so you can go back over it later. You know what I mean? Once you mark it up, blow the screen up, and you know what I'm saying, make the candlesticks big so you got detail. You can see everything that's going on. And on the top right of the screen, you see that little camera over there? All you gotta do is hit that and it'll take a screenshot of the page. Yeah. Take that and it'll save the date, the time, all that shit. So that way you can refer back to that time and see what was going on. You know what I mean? Back then type shit. Like, have a record of it. You know, that shit helps solidify whenever, you know what I'm saying, you need some confirmation about something or just want to review some stuff, just go over, you know what I'm saying, your own charts. Exactly. That's gonna make more sense than anything else you look at. I mean, something that you did yourself. It's gonna spark up, you know what I'm saying, energy in that cluster of neurons in your brain that created that image, you know what I'm saying? It's gonna spark that up and bring those memories back fresh to the forefront. You know what I'm saying? So you can utilize information that you got from creating that. You know what I'm saying? So it just shoot some more energy up over there, and then it starts storing even more memories. I mean, it's taking snapshots of all of that new information that you're getting in, and it's storing it also within that cluster of neurons. So you're making that cluster even stronger because there's more energy going through it, and the more energy you go through it, the stronger those connections be. And the stronger those connections are, the easier it is for you to recall that information. You know what I mean? So the more we send, you know what I'm saying, this information, that's why repetition is real beneficial. It's key because the more, you know what I'm saying, these cells or these neurons wire together, the stronger the more they fire together, the stronger they wire together. They create that connection even stronger. And when that connection is real strong, like I said, it's easier for you, you know what I'm saying, to recall that and tap into it with less effort. You don't gotta work hard and try to build those connections again. You know what I'm saying? Like, nah, that connection is there, it's built, it's solid. All you gotta do is put your attention to it, you know what I'm saying? And wherever you put your attention to, energy flows. And if those connections are solid, energy flowing through those connections like it's nothing. You know what I mean? And you're able to recall all the information, you know what I'm saying, at the stop of a thought. As soon as you think of it, boom, it's there. Just like, you know what I'm saying, you're looking at a picture. You're like, oh, good, I remember that. You know what I mean? That's because you're constantly working on that neuron, you know what I'm saying, that cluster of neurons. So every time you dump some more information related to the same shit in that cluster, you're building those connections. You're building the strength of those connections. So that's where I got this shit from. The Joe Dispenza book. Yeah. I've been picking that shit up and understanding it to the point where I'm able to apply it. You know what I mean? And by me applying it, seeing and noticing the results, I'm able to speak about it confidently because I'm grasping exactly how it works because I'm noticing shit. I'm noticing it within myself. So it's like, okay, good, that makes sense. That's what's going on. You know what I mean? So by having an understanding of it and applying it and having the experience from applying it and noticing the results, it's easier for me to, you know what I'm saying, to speak on it. I'm not speaking on it from a sense of guessing or from somebody else's opinion. Like, I'm speaking on it because I'm practicing this shit and this is what I'm noticing. And it's taking effect. You know what I'm saying? It's working. So that's why, you know what I'm saying, that back testing is important. That's exercising those neuron connections. That's you, you know what I'm saying? Like building the building blocks for those connections to be solid. That's constantly working on. Even though you might not be getting it right now, you know what I mean? But it's doing work. It's gonna be beneficial later. You know what I'm saying? In a major way. You're gonna find it that much easier to tap into that info when it's needed on the fly when the market is live. You know what I mean? When it's needed the most. So it's like a boxer, you know what I'm saying? And a boxer, and also another thing, when we're doing this back testing and doing this practicing, like we literally got to do everything that we would do in the live markets. You know what I'm saying? Just like what they say about boxing, you're not going to practice half step boxing when you know what I'm saying, at the gym practicing. You feel me? You got to go your hardest when you're in the gym practicing, so that way when it's time for you to go your hardest when you're in a real fight, you don't, you know what I'm saying, do what needs to be done. Exactly. So it's the same thing. There's no difference with this. No difference. You got to use that same logic, that same concept. So exactly how we practice. Cool. Oh yeah. Yeah, exactly. Your psyche, yeah, it's not normal. You know what I'm saying? You're not used to dealing with those kind of numbers. So you gotta, you know what I'm saying, stay exactly. It's not beneficial. It's not productive by doing that. It might look good, you know what I'm saying? You might think you're doing something productive, but it's actually harming you more than it's helping you. So exactly. And literally use the all the rules or whatever the strategy is, you know what I'm saying? Stick to that and don't deviate outside of that to get real results. You know what I'm saying? At that point, no variables can change the results. And that right there will help give you the confidence, you know what I'm saying? Because it's not a, you know what I'm saying, you're not doing this for that particular day. You know what I'm saying? We're in it for the long haul. So understanding that, you know that this shit come with losses. We're gonna take L's. It is what it is. But at the end of the day, what does your P&L look like at the end of the week or the end of the month or the end of the quarter? You know what I mean? And that's where it's really at. And following these rules, sticking to that, not deviating from it, you're gonna have more wins and losses. And the wins are bigger than the losses because we're doing that 3 to 1. So at the end of that week, at the end of that month, end of that quarter, you know what I'm saying, that P and L is gonna be up there. As long as we didn't get in and deviate from the plan, you know what I'm saying, and add this to it and add that to it, everything gonna be all gravy. And we can see that by back testing. Back test 20 trades, you know what I'm saying, using that same exact logic with that amount of contracts and see what the result is at the end of the 20 days. You know what I'm saying? And mark that up, you know what I'm saying? And let your subconscious record that. Let your subconscious be exposed to that. You know what I mean? And even if you're not consciously aware of that, you know what I'm saying, aspect of the trading, the subconscious is that's stored in there. It knows, you know what I mean? And then you'll start getting your gut feelings, you know what I'm saying, your intuition from your subconscious. You know what I'm saying? That's coming up because your subconscious know it remembers everything. It forgets nothing. Everything has been exposed to. It's there. We just at times don't have the conscious ability or awareness to access that. You know what I mean? And that's where we get those inner thoughts or like, man, I had a gut feeling. We do the roof. Like, yeah, that's that subconscious hollering like, hey, hold on. I know what's popping. Let me send an urge to you real quick to get your attention. Like, hold on, you about to fuck up right now. Let me holler at you. And you ignore that, something happened. Like, man, I knew I should have listened. That's what that do. But yeah, that's all I really want to say about this. Yeah, break and swing hard or swing low. But it has to break it and it has to close with a body above that hard, not just a wick. Because that wick could just be a liquidity grab. And it's just going up there, you know what I'm saying, to trigger the stop losses or you know what I'm saying, to trigger the limit orders. You know what I mean? And then go the other way real quick. So you gotta pay attention to how that candlestick closed. That's the main thing. You know what I mean, jumping the gun, just seeing price above it, but the candlestick still active, that thing can turn around on a dime. You already know how these markets can move. So that's where that patience come in. There, it's like, okay, I see what you're doing. Let me see that print. That's what's gonna tell it. That don't change. Once it's printed, it's printed. So we just gotta be able to have that patience and wait. And and the thing is, we can't be scared to miss a trade too. That's something I struggled with for a minute. That FOMO shit. You can't be scared to miss a trade. You know what I mean? Like that's something I struggle with. That FOMO, fear of missing out. You know what I mean? We have to realize that, man, these markets is open Monday through Friday, minus a couple of holidays. You know what I mean? Like, man, we miss something today, fuck it, tomorrow right around the corner. You know what I mean? Yeah, don't force nothing or don't chase nothing because you think that, you know what I mean? Like, oh, hold on, it's bought a Ferrari gap and I missed it. Let me you try to get in. And now when you do that, you expose yourself to way more risk because your stop loss still got to go in a respectable area. You know what I mean? And that opens yourself up. So if that trade take off without you, cool, it is what it is. Just pat yourself on the back for at least having the bias and the analysis correct. You know what I mean? So folks that you missed it, just pay attention that the strategy was on point and feel good about that. And just, you know what I'm saying, just sit on your hands, continue to watch price or leave it alone and analyze it, you know what I'm saying, for the next day and be able to execute on it and feel good about it, feel content. And that right there told me a lot because man, the thing, every day the market is open, I have to get in and get something out because I see other people doing that. You know what I mean? But this ain't, and this ain't, I'm not them. You know what I mean? And they're not living my life. So the shit that they do don't reflect on me, and what I do don't reflect on them. So I need to make my own decision to live my life how I need to live it. And I feel like I need to live up to what the hell they doing. So yeah, we got this, man. I'm back on this shit. I had to take a little sit down, you know what I'm saying, to do some reassessing type shit. And I knew it wasn't the strategy because it works. So yeah. So once I peeped that, I'm like, okay, where do I need to focus my attention to make some improvement? Where am I slacking at? Where is the most amount of damage at? I mean, when does that happen? It's like, okay, when those rules are broken. Okay, what rules? Okay, it's that one. The 2 losses done for the day. Okay, bet. We're about to focus on locking that down. Put all our attention on overcoming that, you know what I'm saying, and not letting that be something that gets broken. And man, with that, it's making a difference. Just putting the attention on that one thing. So, but it's just a matter of being real with ourselves and taking a step back and looking at ourselves like not judgmental, just observing like, okay, where you fucking up at? You know what I mean? And just being real and admitting it and bringing attention to that. Like, okay, I see the problem. Now let's find a solution for it. You know what I'm saying? And then make that decision to stand on that solution and then stand on it. You know what I mean? You will notice a difference. So tomorrow I'm gonna do an analysis. Well, basically this was the analysis. You know what I mean? Right now I'm pretty much neutral, but looking for some bearish price action depending on how price act around this 10 p.m. fair value gap and also this 2 p.m. order block. The price on the 4-hour chart, right? Because we got three things that can keep price down right now. So we have the order block at 2 p.m. We have the fair value gap at 10 p.m. And then also, okay, so we got 4 things. And also we're in it. At 6 p.m. Oh, okay, I see it. That one technically did break the structure. That one did. But look at the order block is up there also. So that's all within that area. You know what I mean? So price get above the 10 p.m. fair value gap, then I'm looking to see how price act around, you know what I mean, that fair value gap in that order block right there. Because that's the last line of defense right there. Once the price get close above that, it's running for these relative equal highs and this potential all-time high back there. You know what I mean? Yep, and 6. So we just have to wait and see, you know what I'm saying, what we'll probably do around there. And like I said, there's a lot of stuff up here that can push price down. So we got both those fair value gaps that we just called out, the order block, and the fact that price is going to be in a premium. Also, I would like to see how this second candlestick close inside of this new week opening gap. Do we close? Yeah, do we close above this, or do we close up under it? And if we close anywhere in this gap, is it above this 50% or under this 50%? That's going to tell a lot about what the market wants to do. You know what I'm saying? Because look at price action previously. How did they react and respond to that new week opening gap? The body stayed in the upper 50% of it. The wick came down, did some damage, tapped this order block, and it took back off. You know what I mean? Didn't stay up in there for long at all. Left 2 4-hour candlesticks in there, and it took off. And then when it came back, it dealt with it again. Same shit. Only 2 candlesticks left in it, but it blew right through it. You know what I'm saying? It went right through the 50%. Came down. Now we coming back up. We at that 50%. We got 1 candlestick in there. We got the second one forming right now. And what does this candlestick do? We're gonna blow through it like we did in the middle, or we're gonna stop right there, turn around, and come back down. But maybe slide up and leave a wick. You know what I'm saying? Up in one of those fair value gaps with our order block, as the, you know what I'm saying, they're doing the damage. So I want to see how this second 4-hour candlestick close right now. This one at 6 p.m. That'll help that'll give some more insight. You know what I mean? We'll use that information to help form our buyers. It ain't gonna be end all be all with that, but we'll have more information. You know what I mean? So that's how we're looking at it right now. So, I just wanted to run that past you real quick. I mean, I'm getting back on this live streaming because this is a record, you know what I'm saying, that I can keep me accountable, and also, you know, it's a record for myself. You know what I mean? I ain't gonna lie, I don't like writing, you know what I'm saying, but this right here is like a form of journaling, you know what I'm saying? I can just speak it out and do everything on me, you know? Say what I need to say. Get it all out there. And if I do want to put it down on paper, I can put it down on paper. I can listen to the video. So, yeah, I just thought it was a little session.